Good morning, peoples. Let's jump in here. Although it's not a pretty story, warning on Amazon and AMZY. When I don't report on these, you know there's a reason because they're not performing very well. Between them and the fund manager, it's a train wreck. Got a little bit better on the weeklies, but then I don't like what was done. So let me jump in here. So over the last few days, they got destroyed. Well, let me clarify. Where they got destroyed was on the 816s. Just so that has a lasting effect, though. You're just starting the month, right? I typically do declaration day to declaration day in my accounting. So here you are on 8/8, and you're writing all this stuff for 816. We come along and we got $1.39, $1.60, $1.39, 98 cents. Look at this. 508 and $8. When you do something like that, it will take you, you won't be able to make it up in 5 more weeks. So you're just destroyed when you do it that way. So the fund managers, and I don't have to tell you, I mean, these people are selling these funds out. They're moving to the round hills. They're looking at yield boost. And if you haven't seen my interview there, they can't tell us exactly what they're doing, although they're using some fantastic underlying high leverage, 2x, 3x. So if they come up with an income stream or scheme, and they're not using a sub-advisor, they're doing the work with their professional trading team. So let's see. I think it'll be interesting. But YieldMax is, I mean, I get it that they're trying with the new funds to go to spreads and some of that. So far, I haven't seen them deploy it, but literally, this market turns down, which I suspect it will next month. It's going to be pretty ugly because there's nothing you can do in an income fund when your underlying goes down. You make a tiny bit of income, but you can't offset the massive NAV um, reduction. But in a typically a rising too quickly, you don't want to get destroyed. You want to take 20 cents and go 8% out so you don't get destroyed. But when you go 2 or 3% out and you get $1 and it goes up 7 or 8%, I mean, there's your whole month income shot. I mean, look at this. The loss was 2 million. Call it another 2 million, 1.4. Well, look at all of what they've done in 2 more writing months. They don't equal that amount. They haven't even equaled what this one did. So I'm trying to make a point here. And I think that's why they're going to knock off trying to get the high yield. I mean, they were never honestly that high a yield in Amazon, maybe 50%. That's a very high yield on a big, stable company. But now they're fighting the NAV erosion and they have no money whatsoever to pay out. Are they going to pay out 30 or 40 cents? Probably, return of capital, but they didn't earn anything. All right, so let's jump to 823. So they come along here. All right, they're successful. Great. 5, 6 cents, 43 cents, and 5 cents. So in general, they made money, right? 406,000 out of 427. But look how small those numbers are relative to that 1 week of losses. You got 2, 4, 5. You got almost, like 5.2 million in losses. Hey, nice. You got a good week here. You got 800,000 in gains. Got another week here. Look at this one. This one was positive, except for I don't like the move. I would have wrote something this week. So what they did is on these, they wrote them on 822. So last Thursday, they were out of a portion of these and they sold 4,500, right? So for 81 cents. And then on Friday, 823, they wrote the other 52.15 for 93 cents. Okay. So what they did yesterday, and when I first looked at it, I said, yeah, they bought it back early, right? They bought it 14 cents. That's fine. Look how much they got. And it was only the second day of trading. It was only on Tuesday. I thought, I've never seen them write another one on Friday. I was thinking this was Friday, right? And then I said, well, a dollar two when they dropped to 180. Now, granted, this thing went down to 173, right? So 177, 175, now 173. But guys, that's 8 trading days. Okay, they're going to get 990,000. But why not just try and get 250,000 and write something for 20 cents? I mean, I don't understand giving them 8 trading days. You didn't make a fortune on it by giving them 8 trading days. You know, these are typically 5 or 6 trading days, and they got that kind of money. So for the life of me, I really don't understand what they're doing per se. It's a lot of trading days to be 3.97%. But needless to say, either way, the fund doesn't have any money. Okay. So let's go look at what our weeklies look like. It's all one call now, out at 180, 3.97%, all the way to 96. Some fairness, you do have the Labor Day holiday. So you got 3 trading days today and only 4 next week. So 7. All right. But where are we on those? Where actually, since we dropped, let's go over to holdings. We've captured 17%. But again, it's not a lot. I mean, I shouldn't say it's not a lot of money. It's all relative, but it's not going to make up for all those earlier losses. I didn't update these down here. So where are we on our current synthetic? Well, we have a loss. What's new for Amazon lately? Not much. 367. It's a 175, and we're at 173. So we can flip the script here. But remember, all the way through next week, we can't be above 180, or we're going to lose the 990. So let's take a look at some other. Let's go look at our payouts. All right. I think. Oh, so we closed at 1902. Fair value is 1904. But people are saying, 2 days ago, 75,000 shares were selling out. I'm noticing it across the board. So, I think the August 5 and 6 was a wake up call. I think it hits some of these buffoons that go out there and, margin themselves and have no idea what they're doing with margin and get margin calls. And if they think that was bad in August, wait till September when it sells off. So, people, if you're in heavy margin, you always have to ask yourself, what am I going to do if there's a 15% pullback in the overall market? Can I hang, or do I have to sell everything? Because then you've just guaranteed yourself a big loss. And oftentimes with a margin call, it's exactly what you have to do. So there's a time to play margin. Not very often, in my opinion, but when you do it, make sure you know what you're doing and use it smartly, right? Don't just go out there and say, hey, I'm going to get 50% yield over the next 10 years and I only have 200,000. I'm going to take another 200. And then over the next 8 years, I'm going to get a 50% return instead of retiring at, I'll only be 40, but I can retire with that kind of money. That's a great idea if it worked. But I can tell you what, if it worked like that, everybody would be wealthy. There's no such thing as a 10-year 50% return. It just doesn't happen. Now, if you're a day trader and you work diligently and you were really good, but you got to work at that. If you think you can just park your money in this fund and these guys are going to make you 50% yield a year, good luck with that. There's times that it happens, right? And you got to really appreciate it. I remember when I first got into Misty and, saying, my God, I'm getting 100% yield. I'm up 100% from where I bought the fund. Is this, too good to be true? And when something is running, it can sustain that. It could be 6 months, 8 months. Again, depends on how it runs. If it runs in a week, 25%, there's no way that an income fund can handle that. That's when you want to be in a 2x underlying ETF that doesn't pay any income. So there's strategies that got to be played. I don't know how to tell many people. You can't just go park your money in these income funds and think they're going to make you rich. You can get 10%, you can get 12%, but you can't get a consistent 25, 35, 45, 65 year after year after year. It just doesn't happen, right? And those of you that don't want to hear that and unsubscribe, you're welcome, right? I'm always going to tell it as I see it, and I've seen it for 35 years. I love these new tools, but you got to know how to use them, and you got to know when to use them. All right, peoples. So let's look at let's look at payout. So here we are. It's not pretty, right? I don't know why I just fixed that earlier and went back. But anyway, look at this number, right? We're losing still 951,000, and that assumes that we win the 990. Okay. So we're only losing 11 cents there, but we could very easily be 20 or 30. Look over here. We've just been destroyed. All right. So what are they going to pay? Big question, right? 35, probably 38 cents. That's my guess right now. Not that they can really change it in earnings. I just think they're going to pay some kind of distribution. A big portion of it will be a return of capital. But if you're thinking you like this, those days are over for now. They may come back, but they're over for now. And the NAV's starting to reflect it. Okay, guys, that's what I got for you. I mean, I wish it was better news. I really, really do. There will be some things to play. But I don't think the markets, if you ask me, what do I think the stock market's going to do next year and the NASDAQ and the S&P? Maybe 5 to 8%. Possible it's a negative return for the whole year. That's what I see. Do I think there's some sectors where you can get 20, 30, 40% out? Absolutely. But anybody just thinks that, AI is going to make the NASDAQ, I don't know what it's going to end up this year, right? We're up near highs now, but markets don't perform like that. The NASDAQ doesn't do 45%, 40%, 38%, 50%, and string them together. It just doesn't happen. And if it does happen, you're setting up a crash, right? Go back and look at the .com, the 96, 97, 98, 99, and what happened in 2000. NASDAQ went from 5,000 down to 1,500 over the next 2 years. And it took it how many years to get back? 15 years, 18 years, 20 years. A long time. So when it's good and you're getting it, fantastic. But you can't project that out, right? Just like if markets went down 8% next year, the indexes, hey, we might have a 12% up the following year, right? I mean, that's what markets do. And that's why if you look and you see over 50 years, the S&P is going to return you over 8%. And that's pretty realistic, right? But think about that 8%. It's had some minus 20 years, plus 40% years, been all over the map. It's just not 8% every year. All right, guys, that's what I got for you. Again, I wish it was better. This is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. See you, peoples. Bye.